Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
John, we have Donald Trump saying it's terrible, it's horrible that the Fed is even thinking about hiking interest rates again. Is he interfering in something that should be independent, or is that a valid comment?
Well, presidents always have opinions about this stuff. It's come out lately that behind closed doors, Ronald Reagan, for instance, was really mad that Paul Volcker raised interest rates in the 1980s as high as he did. Trump is unique in that he takes the stuff that happens behind closed doors and puts it on Twitter a lot of the time. And so this is kind of unusual to have the president actively trying to intervene in monetary policy, because the Fed is supposed to be independent. And everybody knows it's not. Everybody knows it's primarily an arm of the banking industry and primarily a political entity, blah, blah, blah. But what we're seeing now is that whole thing laid bare. And interestingly, ironically, it increases the odds of a rate increase in this week's meeting, because Fed Chairman Powell doesn't want to be seen to be folding in the face of pressure from the president. So he's going to want to assert his independence, and because of that, he's more likely to raise interest rates, I think, this time than he might not otherwise be, because there's a lot of reasons out there right now for not raising interest rates. If you're the Fed, the financial markets are in turmoil. You've got civil unrest kind of sweeping Europe right now. You've got Angela Merkel, the Chancellor of Germany, who's probably on the way out to be replaced by who knows whom. And you've got a lot of other things going on in the world that are potentially destabilizing, and therefore don't need higher interest rates to make things even worse. So I don't know. Everybody seems to expect a rate increase from the Fed, but it's possible that they won't. It's probably 70-30 in favor of a rate increase, but the standing pat and being data dependent going forward is completely possible too. And I'll tell you what, if they don't raise interest rates this time, and especially if they don't raise rates and intimate that they might be done, then that'll change things in the financial markets. You'll see a temporary pop in stock prices and a really big jump in gold prices, probably. Because I think precious metals are waiting for the end of this tightening cycle, and the resumption of monetary ease to really take off. So that could be the beginning of the process that finally lets gold and silver go up.
If gold and silver go up, does that mean the U.S. dollar is going to go down?
Well, that's exactly what it means by definition. If gold goes up, gold is a competing form of money. So if it goes up in value, that's the same thing as saying the dollar went down in value relative to gold. So yeah, you would think, that's not how we measure fiat currencies in this world. We measure them against each other. So the dollar might or might not go down against other currencies, because the other currencies have stuff going on too. Canada, you guys have falling oil prices, which is an issue for a big oil producing country. Europe has all that civil unrest now that's leading to aggressive increases in government spending to try to placate the people who are in the streets, and that leads to a weaker currency a lot of the time. So there's no way to know what these fiat currencies are going to do versus each other. But in a world of rising government deficits and an end to monetary tightening and a resumption of monetary ease, gold ought to go up against all of them. So you should see gold rise in all of the world's major currencies simultaneously.
If the U.S. dollar, holds on, what does it mean for other currencies? Are they going to drop rapidly?
Well, all the major fiat currencies, with maybe the exception of the Swiss franc, ought to go down. And they have been going down over time. They have 1 or 2 or 3% inflation each year, most of them. And so they lose that much value each year. And to the extent that their governments are going to start increasing spending and increasing deficits in response to a slowing economy, you would think they would go down even faster. And then there's a critical mass kind of thing out there where enough people figure out that that's the policy of their government to make the currency weaker every year, and then they start front-running it. And that turbocharges the process of the currency losing its value. So that's out there waiting to happen. We don't know whether that's a near-term or a long-term thing, but it's something that will happen at some point given the mistakes that we're making.
We'll have more with John Rubino right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Rubino. John, one of the major investment firms in Canada, one of their economists says there's going to be a recession in Canada next year. Does that mean the U.S. will also be in recession?
Well, there's a lot of signs of slowing right now between the flattening yield curve, which is traditionally something that precedes a recession. Whether it's caused by the recession or causes the recession is open to debate. But you tend to see an inverted yield curve before you see a recession. So we're headed for an inverted yield curve now. The auto industry is contracting. You're seeing the big car companies lay off a lot of people and close plants. Home builders are doing really badly compared to what everyone expected, so their stocks are way down. And generally, new home sales in the U.S. are weaker than anybody expected, and existing home sales are down a bit, and prices are starting to roll over in a lot of places. So you got a lot of indicators of a slowdown. Now, whether that turns into a recession or not remains to be seen, but let them go on for a while. Let the stock market tank from here. We're down 10 or so % on most of the big indexes. Let them drop another 10% so that we're in a bear market, and that alone could cause a recession in a hyper-financialized economy like ours. So, there's no way to know ahead of time, but there's certainly a reasonable possibility that we enter a slowdown at some point in 2019.
Should the Fed have QE5 come along and try to prop up the market again, or should they just let market forces decide the actual values?
Well, they should just let markets work themselves out. Otherwise, why have markets, Because markets operate via price signals that tell people what to do with their capital. So if you're going to hamstring those price signals by constantly intervening in the market, in order to prevent anything from going down, then the market price signaling mechanism won't work and capital will be misallocated, and capitalism, such as it is, will grind to a halt. You might as well have pure socialism where the government runs the economy, because that's kind of what you're trying to achieve anyhow if you just intervene at every little squiggle in the market. The flip side of that, though, is that we're so far gone that if governments don't intervene in whatever bad thing happens next, the resulting crash will be pretty serious. We'll have a couple of really hard years. But that's still what we should do. You've got to take the pain. You have to accept losses in capitalism for the gains that come from capitalism to be possible. And to the extent that we're trying to have one, the gains, without the other, the losses, we get neither in the end. We just end up being this flat on its back mess of a system where we start to look more like Europe, where people end up in the streets burning their cities, and the military has to be called out, and then the government has to respond ad hoc, flying by the seat of its pants to try to placate the people in the streets. That doesn't work. In the end, that devolves into chaos. And we could get there in the U.S. very easily if we keep on with our current set of policies.
Well, in France, we saw policemen battling it out with paramedics and firemen, usually people on the same side of the line.
Yeah.
And the police in Holland and Belgium, where they've had protests as well, have said, we're not going to do anything as long as you don't cause property damage, because we're on your side as well. So it seems like a popular revolt taking place even amongst the so-called authoritarian people. Yeah,
that's the thing. In a system like France that's really far gone down the road towards socialism, people don't know what side to be on. They instinctively respect the state, but they are offended by the behavior of the elites. And they want things from the government, but they don't want to pay for those things through higher taxes. So they're extremely confused, but they're also extremely angry. So they're out there, but they don't know who to fight. And that's what you get when you start with capitalism. Try to turn it into a socialist system secretly, and end up messing everything up. So France is just a sign of things to come. We're headed that way, and we'll get there soon enough, unless we make some radical changes.
Well, isn't that the problem you get when you have 400 or 600 people who own 2/3 or 3/4 of the world's assets?
Exactly. That is exactly what you get. You get angry people among the 99%, and they will vote for fringe candidates who promise to do something about it, and they'll take to the streets when they don't get what they think they deserve, or what they really do deserve. I mean, nobody deserves to live in a system where a handful of aristocrats own half of everything, and 40% of the people own virtually nothing. You can't have a system like that works in any meaningful way, because you can't have elections in that kind of system, because every election is completely crazy, because so many people are so angry they're willing to listen to anything. And you can't have functioning markets, because the vast majority of people don't have any capital to invest, so they don't have a stake in the functioning of markets. And the rich people are so disconnected from what everybody else is going through that they're no help. So you just got a huge mess. And Europe is further along that road, but if you look at what the Republicans are doing in the U.S., for instance, we elected and gave both houses of Congress, along with the White House, to the small government party, the Republicans. And if they actually were true to their guiding philosophy, they would have come in with a meat axe and cut entitlements way back, and cut every conceivable kind of spending that lives don't depend on in the moment, and shrunk the government. And then they would have given taxpayers back some of the money that they pay now, because that's what a small government party does. Instead, they came in and they instantly started spending more money. They cut taxes dramatically, ramped up deficit spending, and now they're talking about a big infrastructure program. That's the next thing to come, where they rebuild all the roads and bridges and build that wall across the Mexican border for billions and billions and billions of dollars. So we're going to be looking at, well, for sure, $1 trillion deficits going forward, and as soon as the next recession hits, $2 trillion deficits with no end in sight. Nothing is going to happen to bring those deficits down. Where does that lead? Currency crisis eventually. People figure out that this currency is being inflated away at an aggressive rate. They don't want to hold it anymore. So we're headed that way. All the policies that we've got in place now are pointing in that direction. And no matter the outcome of the next election, whether the people who are currently in charge stay in charge, or the other party, which is now being captured by the far left, gain power. You know, if we have Bernie Sanders or a younger female version of Bernie Sanders get into power next time around, then we're going to see massive increases in government spending, massive increases in taxes and regulation, and voila, we're Europe. So none of this is going to work. And we probably can't fix it politically, so the market will have to fix it through some kind of gigantic crisis.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with John Rubino. John, if unrest over the political, or I should say the financial situation in the U.S. comes to fruition, Americans are well armed.
We are indeed.
And is that why people really believe in the right to own a weapon? Because they don't trust the government is going to handle stuff?
Well, the Second Amendment, which guarantees the right to own guns for people, the motivation for that is still being debated. But the one I like best is that the framers of the Constitution, the founders of the country, recognized that you need a well-armed populace that the government is afraid of in order to limit the power of government. So I really like the idea of people with guns who are willing to use them if the government steps out of line. And that's not always how guns are used, obviously. So it's not working out quite as purely as the idea of guns keeping the government in line would make you hope. But yeah, we are extremely well armed, and civil unrest in the U.S. would have a very different flavor than civil unrest in France, where those guys are armed with his signs and things and flashlights. So, if things really spin out of control here, then you get some really interesting dynamics going on in different parts of the country. And, we got to hope we never see this, because it's completely possible that firefights break out where in other countries some cars get burned or something like that. And here we've got, automatic weapons versus hunting rifles versus drones versus helicopters. It's too crazy to think about, but not out of the realm of possibility when the economy really breaks down. Because remember, people are pretty angry here now because they don't feel like the big systems are working for them. Whether your focus is on healthcare or immigration or jobs, you've got a reason to be angry if you're part of the bottom 50% or so of the U.S. income ladder. And that's in year 10 of an expansion when the labor markets are supposedly pretty tight. So let the next recession hit, let unemployment go back up to 12%, let everybody be thrown out of their jobs in local government because pensions are exploding, and the remaining big companies because trade is contracting, and you're going to have a lot of really angry people. So yeah, it's kind of a grim prospect if you just think about the fact that we're not in a recession right now, and people are, not speaking very well to each other as it is. We have a lot of people who are at the fringes of the right and the left right now, and who really don't consider the people on the other fringe completely human. So take those people and throw them out of work, and who knows what's going to happen. And again, you got to hope we avoid this, but we're doing the things to set this up, to make it possible. And there's no end in sight to those policy mistakes right now.
Well, gosh, there's a new song out that goes pretty well. I got hit by the tax man. I lost my job. I lost my car. I got hooked on OxyContin. I bought a shotgun. Those are the lyrics, and I'm going like, is that what's really happening in America?
Yeah. Well, down on the bottom couple of rungs of the economic ladder, yes, it is. We're seeing huge numbers of what they call deaths of despair. Drug overdoses, suicides, illnesses relating to drug overdosing and drug abuse and smoking, stuff like that. We're seeing things that healthy, happy people tend not to be involved in, and the numbers of those things are going up. So yeah, the idea that same group of people that's kind of committing slow motion suicide because their lives are so rough, the idea of them going out and buying guns is completely consistent with human nature. So yeah,
if I'm going down, I'm taking people with me.
Yeah, well, or I'm going to punish the people who I blame for my situation. And that's the whole civil unrest thing, where the peasants grab their pitchforks and head to the castle. Of course, in this case, like you said, it's a shotgun, not a pitchfork. Oh. But anyhow, crazy stuff going on out there, Jim, and this is an investment thesis at its heart. So how do you structure your own finances?
And how do you?
You ready for this? Well, you want things that don't depend on the value of the local currency, right? If you're in Europe right now, especially if you're in France, and you've got a bunch of euros, you've got to wonder what happens to the euro. In other words, what happens to the value of your bank account if all the big governments in Europe start ramping up spending and deficits in order to tamp down civil unrest. It's bad for the euro. So you want to get out of the euro. You want to buy real assets. So a well-chosen piece of real estate, precious metals, oil stocks, good quality oil stocks. Things like that tend to hold their value because governments can't make more of them when governments panic. So you shift your finances in that direction and pay off debt, It's good to be debt-free no matter what. That is all-weather advice. There's never really a time in the business cycle or in the broader credit super cycle when I wouldn't say pay off all your debts, because that's just a good way to be. If you're debt-free, you are 2/3 of the way to a well-structured, happy life. So do that. Pay off your debts with whatever's left over. Buy hedges against financial instability. And then, as Chris Martenson likes to say over at Peak Prosperity, social capital is extremely important. In other words, you want to connect yourself to your community as much as possible because people help each other out in hard times. And you want to be firmly embedded in a network of people who you can help if you can and who will help you if you need it. Because the odds of you needing it are going to go up dramatically if the worst case scenarios start to play out.
And it's hard for a government to tax and control something like swapping eggs and chicken and services between friends and hairdressers and so on.
Exactly. exactly. You know, my wife is a counselor here, and we know some local farmers, and they sometimes swap services. So no money changes hands, but we get stuff, and they get stuff they need from her, and you know, a network of people who you work with in that way not only lessens your need for being part of the financial system, but also it's fun. You know, you have friends that you work with, and your life is enriched by that. So it's again, that's kind of all weather advice. No matter when it is and where you are, you should be doing stuff like that. You should be trying to plug yourself into your community. It's a form of insurance, and it's also a form of giving back if you're one of the fortunate ones.
John, thank you so much.
Sure thing, Jim.
Best of the season to you and your family.
You too. Happy holidays.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for John or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Best of the holidays.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.